Wondering how to protect and grow your money with low-risk investments in 2026? While higher-risk investments can offer big returns, low-risk options provide stability and security with steady growth. Whether you're saving for the future or just looking for safer ways to invest, there are plenty of options available. From high-yield cash reserve sweeps to Series I savings bonds and money market funds, these low-risk strategies ensure your money is both safe and earning. In this article, we'll dive into the top 5 low-risk investments that actually work in 2026 and help you make informed, secure choices for your financial future. 1. High-yield cash reserve sweeps. High-yield cash reserve sweeps are an excellent way to keep your cash safe while earning better returns. Fintech platforms like Wealthfront and Betterment offer services that sweep your money across multiple partner banks, ensuring that your funds are spread out to maximize security. This provides you with up to $5 million in FDIC insurance, far exceeding the standard $250,000 limit offered by traditional banks. Additionally, these platforms offer interest rates that often mirror the federal funds rate, giving you a competitive return on your savings without taking on significant risk. This is a great option for emergency funds or cash reserves, as it allows your money to stay liquid and protected. You can access it whenever you need, while still earning a higher yield than a typical savings account. By using cash reserve sweeps, you're not only ensuring your funds are insured, but also benefiting from a return that helps keep pace with inflation. It's an ideal solution for anyone looking to grow their savings securely while keeping their money accessible for unexpected expenses or opportunities. 2. Series I savings bonds. If you're looking for a low-risk, inflation-protected investment, Series I savings bonds are one of the best choices. Issued by the U.S. Treasury, these bonds are backed by the government, ensuring your principal is safe. They come with a composite interest rate that adjusts semi-annually based on inflation, making them an excellent hedge against rising prices. The inflation-adjusted rate ensures that your investment keeps pace with inflation, preserving the purchasing power of your money over time. I-bonds are a no-loss investment if held for at least 1 year, as they guarantee both your principal and interest. They are perfect for those who want to protect their money from inflation while earning a reliable return. These bonds are especially attractive in times of high inflation and low interest rates, providing a secure, low-risk option for conservative investors. 3. Short-term Treasury ladders. If you prefer keeping your money liquid while still earning a safe return, consider using a short-term Treasury ladder strategy. This involves purchasing U.S. Treasury bills, T-bills, with different maturities, such as 4-week, 8-week, and 13-week T-bills. The latter ensures that a portion of your money is available for withdrawal every few weeks, while you continue to earn a fixed return. Treasuries are state tax exempt and backed by the U.S. government, making them one of the safest investments available. The laddering strategy allows for both safety and flexibility, giving you regular access to funds while still earning competitive returns. 4. Defined outcome ETFs, buffer ETFs. For those seeking stock market exposure without the volatility, buffer ETFs are a great option. Providers like Innovator and First Trust offer these ETFs, which use options to buffer you against the first 10% or 15% on market drop, while still offering exposure to the broader market's potential gains. In exchange for protection from market downturns, buffer ETFs cap your upside potential, but they still allow for growth. This strategy provides a safety net for investors who want stock market exposure but are wary of market crashes. These ETFs are ideal for risk-averse investors looking for stock market growth with built-in protection. 5. Money market funds, MMFs, with check writing. For a safe and liquid option, money market funds, MMFs, are one of the best choices. These funds invest in short-term, high-quality debt, offering one of the safest ways to earn a return on cash. Providers like Vanguard and Fidelity offer MMFs with check writing capabilities, giving you convenient access to your funds while earning competitive yields. MMFs are low-risk, low-volatility investments, making them ideal for conservative investors or those who want a safe place to park cash. The funds are highly liquid, meaning you can access your money at any time without penalties. They're great for anyone who needs quick access to cash without sacrificing safety. There you have it. 5 low-risk investments that can help you grow your wealth in 2026. Whether you're using high-yield cash reserve sweeps or investing in Series I bonds to protect against inflation, These strategies offer safety and consistent returns. Buffer ETFs and money market funds provide exposure to the market without the stress of volatility. Start integrating these low-risk options into your portfolio today to secure your financial future. If you found these tips helpful, be sure to like, share, and subscribe for more financial advice. Let me know in the comments which option you're most excited to try.